Hi friends, in this video we'll learn accounting for accrued expenses, outstanding expenses. In our earlier video we have learned what is the difference between accrued expense and an outstanding expense. Accounting for them is the same, but there is a slight difference between the meaning of an accrued expense and an outstanding expense. For that you please refer to an earlier video on that. Now, what is accrued expense, what is outstanding expense, we'll learn through an example. Let us take an example. In a factory, let us say there are 100 workers working and they get 10,000 rupees per month per person as wages. And as per the contract with the workers, salary of a month is paid on 10th of the next month. So salary becomes due on 10th of next month. So what is the meaning of this? The meaning of this is, suppose I work in the month of April. I am going to get the payment in the month of May. That is 10th of May I am going to get my wages for the month of April. So April I am going to get wages in May. Wages of month of May I will get in June. This is, let us say, 10th of May. This is 10th of June. For the month of May I am going to get the wages on 10th of June. Similarly, wages for the month of June will come on 10th of July. July month wages will come on 10th of August. Let us say this is 10th of August. Here August completes, or we can just remove the confusion, we'll write August here. Now August month wages will come on 10th of September. This is 10th of September. September month wages will come in October 10th, like so on so forth. So we can say November, December, January, February, March. So this is how we are going to get the wages. October, November, December, January, February, March. Now what will happen to the month of March? Wages for the month of March will be paid on 10th of April next year. So now the wages for the work done during April becomes due on 10th of April, 10th of the next month, that is 10th of May. Wages for the month of May become due on 10th of June. If they are not paid on 10th of June, they become outstanding. Actually, the business every day is incurring some expenses. So when, let us say, the worker has worked from 1st April to 7th of April, we will say the business has incurred an expense. The workers have earned their wages. The business has incurred expense, or we call it as accrued. Expense have accrued to the business and the workers have earned their wages, but they can demand it only on 10th of the next month. On that day it becomes due for payment. If on that day it is not paid, then it becomes outstanding. So every day the workers earn and the expense accrues to the business, but the business has the duty or the responsibility to pay the money on 10th of next month, and the worker can demand the payment on 10th of next month. On that day it becomes outstanding. So how do you account for these items? So during the year it is very clear that we would have paid 11-month wages. April month wages would have been paid in May, May would have been paid in June, June would have been paid in July. Let us say we are talking about a financial year. Our accounting period is a financial year. So we are preparing accounts for year starting on 1st April 21 and which is going to end on 31st March 22. This is my accounting period. I am preparing final accounts for this period. This 12-month period is my final accounts period. I am going to prepare financial statements for this 12-month period. So I know that 11-month wages would have been paid during the same accounting period. I would have passed the entry wages account debit 1 lakh rupees. How much is it? 10,000 rupees per month, and there are 100 workers, so it will be 10 lakh rupees. Sorry. There are 100 workers earning 10,000 rupees. So 10 lakh rupees I've paid in, let us say through bank. I would have recorded it as an expense in my books of account. These are wages for the month of April to February. So wages for the month of April to February have been paid during the year, so it has been recorded as an expense. Now, what about the wages for the month of March? Wages for March 22. My accounting period starts from April 21, ends in March 22. So what about the wages for this period, 1 month period? This will be paid on 10th of April next year. 10th of April 22. It is the next accounting period. So can we leave recording the expense? Can we forget recording the expense? Can we overlook recording the expense? The answer is no. We should record the expense as soon as it accrues. As soon as we have enjoyed the benefits from the work done by the workers, we know that we have a responsibility to pay. We have incurred the expense. Maybe the amount will be paid in the next year, but it is an expense for this accounting period, for this 12-month period for which we are preparing accounts. The workers have worked in this month of March. We have enjoyed their work. We have produced goods and we have generated income from their work. So the expense relating to this period has to be recorded in this accounting period only, even though the money is paid in the next accounting period. We don't follow the cash system of accounting. We follow mercantile system of accounting. So mercantile system of accounting, accrual system of accounting requires you to record the expense as soon as it is incurred. Wages account, debtor. So this is 10 lakh rupees per month, 11 months. So again we have 10 lakh rupees for the month of March. I have not paid the money yet, so I am going to record outstanding wages account 10 lakh rupees. So this was 11 into 10 lakh for 11 months. This is 1 month 10 lakh rupees. That means we have now recognized totally 12 months expense as 12 months expense in our books of accounts. Totally 12 months. 11 months paid in cash and 1 month is not yet paid. See, even though we have not paid the amount, we have recorded the expense. The logic here we are following is wages, nominal account, expenses, hence debit. Now what is this outstanding wages? Outstanding wages, this is nothing but this is the name of a register where I am writing down the names of the workers as creditors to whom we owe money. So we'll say workers, personal account, giver, credit. We are treating them as creditors in our books because we have to pay them their month's wages to them. They have given their 1 month wages as a loan to us. So till the time we pay the money to them, it is like a loan for the business. So we are showing it as a loan taken from the workers. So these are the two entries we pass. When I pay it in cash, I'll write it very clearly so that it is easy to understand. April to February wages I've paid in cash, so I'll pass the entry wages account debit to bank account 1 crore 10 lakh rupees. 11 months, 10 lakh each month. 1 crore, 10 lakh rupees. Accrued wages for March. So what is the entry I pass for this? Wages account debit to outstanding wages account, or you can even use the word accrued wages account. 1 crore 10 lakh. You should actually use the word accrued wages. Even if you write outstanding wages, it is not a crime, but actually we should write accrued wages. It will become outstanding wages on 10th of April. If it is not paid, then we should call it as outstanding wages. So till the time it is not due, we should use the term accrued wages. After it becomes due and it is still not paid, then it becomes outstanding wages. Accounting is the same. Whether you use outstanding wages, accrued wages, it is not going to make any difference. Now, these are the entries we pass in FY 2021-22. So if I prepare my accounts now, what will happen is wages account, if I prepare wages account ledger, if I prepare, there will be two entries: to bank 1 crore 10 lakh and to outstanding wages or to accrued wages 10 lakh rupees. If I open accrued wages account, I'll write by wages 10 lakh rupees. Now, how these two items will appear in the trial balance? There is a balance of 1 crore 20 lakh, carried down, brought down 1 crore 20 lakh. There is a balance of 10 lakhs on the credit side, higher side. Now, if I prepare a trial balance as on 31st March 22, particulars rupees, wages, it will appear as a debit balance 1 crore 20 lakh, accrued wages 10 lakh. This is how my trial balance will appear. So logically we are saying there are 100 workers, each worker gets 10,000 rupees per month into 12 months. So this is my total expenditure for the year. This is exactly tallying. 10,000 into 100 is 10 lakh, into 12 is 1 crore 20 lakh. Accrued wages 10 lakh. We know that the workers can demand payment on 10th of next month. So this is logically 1 month wages which are outstanding at the end of the year or accrued at the end of the year. So this is logically correct. So how do we deal with it when we prepare my final accounts? I go to the trading account. I am going to show two wages, 1 crore 20 lakhs on the debit side of the trading account. I pass an entry trading account at to wages. This account will get closed. Accrued wages, it is a liability for the business. This is 1 month of wages of the workers which they have given as loan to the business. We are holding it as a loan for the business. We are going to give it to the workers on 10th of the next month, that is 10th of April next year. So till the time we have to show it as a liability in the books of accounts. Accrued wages will be shown in the liability side, 10 lakh rupees. So this is how we account for an accrued expense or an outstanding expense in our books of account. We can take one more example to make the concept we can say more clear. Let us take one more example. Let us say the manager of a business gets a salary of rupees 20,000 per month on 15th of each month. He joined on 1st April 21. Now, our accounting period for which we are preparing our accounting period is from 1st April 21 to 31st March 22. Now, let us see how do we deal with this information. A manager of a business gets a salary of rupees 20,000 per month on 15th of each month. He joined on 1st April 21. Now, here we are saying 15th of each month means if you work for one full month, on 15th of next month you will get the full month salary. And this man has been hired on 1st April 21, that is when our accounting period started. So he would have drawn totally 11 salaries from the business. April month salary would have drawn in May in June month salary in July, so on and so forth. And February 22 salary would have drawn in March, but March 22 salary he will draw in April 22, which is not a part of our accounting period. So what are the accounting entries we would have passed? Salary account debit to bank account. We would have passed 11 entries of 20,000 rupees each, 2,20,000 we would have already paid in cash to him. This is salary for April 21 to February 21. They have been paid. Now what about the salary for the month of March 22, which is a part of our accounting period? Our accounting period is for 12 months. So March 22 salary, it will be paid on 15th of April 22, which is not a part of our accounting period. So even though it is not paid, we have to recognize the expense. We pass the entry, salary account debit to accrued salary 20,000 rupees. We are recognizing the expense in the books of accounts, and as soon as we recognize the expense, we also recognize a liability that we have to still pay the money for this expense. We have not yet paid the money. So what will happen now? Salary account will have two entries in it. To bank 2,20,000 and to accrued salary. Sometimes we also use the term outstanding salary 20,000. Outstanding salary will have one entry in it, by salary 20,000. So it will be showing a balance of 2,40,000. It will be transferred to P&L account. We'll write by P&L account 2,40,000. This account will continue to show a balance because it's a liability. It cannot be closed. 20,000. So how do we deal with it in my final accounts? In P&L account, I will write to salary 2,40,000, and in the balance sheet we will write accrued salary in the liability side 20,000. So this is how we are going to deal with this in the final account. So this is how we deal with accrued expenses when we are dealing with them in the final accounts. Now a question might arise in your mind. What will happen in the next year? Somebody can ask a question. What happens on 15th April? 15th April 22, when salary for March 22 is paid. So what will happen on that day? On that day we will pass the entry outstanding salary account debit to bank account. We are not going to again book it as an expense. We already have recognized a liability in my balance sheet. In my balance sheet I am already showing a liability, accrued salary 20,000. So this will be paid on 15th of April. So when accrued salary is paid, we pass the entry outstanding salary account at R2 bank or accrued salary account at R2 bank. So with this I close the liability from my books of accounts. So just to recap, when expense is paid in cash, we pass the entry expense account debtor to cash account, or let us say bank, with the amount paid. When expense is accrued or becomes outstanding, that means we have enjoyed the benefit, we have used the benefit, but we have not yet paid the money. So we have to pass the entry expense account debit to accrued expense or outstanding expense account. Next is when outstanding expense is paid, then we discharge the liability. We write accrued expense or outstanding expense to bank account. So this is the entry we pass to close the outstanding expense account in our books. So I recap again: when expense is recognized, when it is paid in cash, we pass the entry expense account to cash. When expense is accrued, that means it is due but not yet paid, then we pass the entry expense account to outstanding expense. When outstanding expense is discharged, we pass the entry outstanding expense account to bank account. So this is how we deal with accrued expenses or outstanding expenses in books of accounts.